Tesco's admitted that it overstated its first half profits by an estimated £250 million. Deloitte's been called in to undertake a comprehensive review of the accounts of Britain's biggest retailer by sales, under tremendous pressure from the supermarket price wars.
This is clearly a shock, and it's another blow to Tesco. After a string of profit warnings, now they have overstated profit and they have to get to the bottom of how this happened.
The problem's one of revenue recognition. Tesco said the profit overstatement was principally due to the accelerated recognition of commercial income and delayed accrual of costs, and was focused mainly on its UK food business.
What's at stake here is payments that the suppliers make to Tesco for promotions or to get a good location or a good spot on the shelves or at the end of an aisle. And the question here is when Tesco has accounted for that. But I think Tesco needs to be an awful lot clear about what kind of payments are in question here, when they're usually due, and how it came to be that they were accounted for so early.
This is a large figure. Negotiations with suppliers go on all the time, and this is a bit of a grey area, but this is a large amount of money and it could get bigger because this is only for the half year. Dave Lewis said this morning that if it went into prior years, so be it. So there is no guarantee that this is the bottom of how big the figure could get for Tesco.
4 senior directors have been suspended while the investigation takes place to assess how much the Tesco board was in control of internal procedures.
I can't believe investors will be anything but absolutely appalled. I mean, this is the central part of how you run a business. You have to have proper controls over what is revenue, what gets counted, and what doesn't get counted. And this suggests that Tesco, in addition to having just gotten rid of its CEO and its FD, does not have the proper controls in place, or at least hasn't for at least the last 6 months. And that's got to be frightening for investors, because the only way you can invest in a company is to look at its numbers and decide whether you think it's a good deal. And if those numbers are not reliable, what can you do?
The shock announcement was made by Dave Lewis, who was due to join as chief executive from Unilever on October the 1st, but took up his position a month early.
It's a commercial manager in our team who has raised an issue. And raised an issue which has kicked off an investigation which I take very seriously and will investigate fully. But we won't speculate on what it is that's happened here until we know exactly the detail.
This is pretty grim for Dave Lewis, but ironically it could be good news for Dave Lewis. He will be able to kitchen sink the numbers because of this. He will also be able to decide who he wants to keep in the business and who he doesn't.
The profit inaccuracy means Tesco's weak performance was even weaker as it faces competition from hard discounters in the market.
Tesco is not in any different place in terms of the competitive position than it was before this, but clearly Tesco is challenged on many fronts. This will be very disruptive internally. Tesco's already been on the back foot in trading. This can't help.
I think there are lots of questions still for Dave Lewis to answer. We've got the results coming up on the 23rd of October, we think now, and we'll want to know then exactly about the size of this problem and the depth of the problem. They're the answers that investors should want.